Michael Burry, this disaster will happen if the U.S. can't pay its debt. The recent debt ceiling standoff gave a glimpse into how catastrophic a federal default would be for the U.S. economy. While a bipartisan agreement is the easiest solution to the crisis, there are other possible solutions to breaking the standoff, including a $1 trillion coin that has gained traction in recent years. So what exactly would happen if the U.S. government fails to raise the debt ceiling? And can a $1 trillion coin really put a stop to the crisis? Today we're going to talk all about what disaster will happen if the U.S. can't pay its debt, and what Michael Burry said about this. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Despite the short-term deal struck between the Republicans and the Democrats in early October, the debt ceiling crisis is far from over. Congress needs to decide by December 3rd if the U.S. government will raise the debt ceiling or default on its loans. But there are other possible solutions besides bipartisan agreement. The debt ceiling can also be raised by a process known as budget reconciliation. First introduced in 1974, this process can expedite the passage of certain tax, spending, and debt limit legislation. What would otherwise require a 60-vote majority in the Senate to pass would only require 51 votes, or 50 votes, plus the vice president as the tiebreaker. The reason they're hesitant to do that is that it forces them to specify a dollar amount raised to the debt limit, American Enterprise Institute senior fellow Philip Wallach said. If Democrats move through reconciliation, they'll have to stick a number into that law, and that number is likely to be over $30 trillion now, so they're worried about the way that looks and the way voters will judge them for that. Other solutions are more radical. The president can raise the debt ceiling using the 14th Amendment, which states that the validity of the public debt of the United States, authorized by law, shall not be questioned. But other experts warn that using the 14th Amendment could potentially lead to a constitutional crisis. Congress has made it really clear through their actions over the past years that they consider it in their purview to raise the debt ceiling. Brookings Institute senior fellow in economic studies said, "If the president were to say, no, it's under my purview to raise the debt ceiling, you create a crisis about powers of the executive branch versus powers in Congress." Then there's the idea of minting a $1 trillion coin, which was first introduced during a similar crisis in 2011. The Federal Reserve generally determines when and how much money the Treasury Department can print. But some scholars have identified a law from 1997 that allows the Treasury Secretary to mint and issue platinum coins in any denomination and quantity. The effectiveness of implementing such a coin is up for debate. It's not a way to assure the governments of the world and the world economy that we are in fact as risk-free as we're supposed to be, Vanderbilt University law professor Yesha Yadav said, but in the absence of other solutions, it's certainly a plausible way forward. However, AEI's Wallach warned that the fact that it strikes people as so outlandish is not just a small flaw, it's a real problem because the Treasury Department depends on the confidence of global investors and of the American people, and if it seems to be playing strange games, it could seriously erode that confidence. Will the U.S. run out of money? In a research note published September 22nd, Barclays analyst Joseph Abate noted there's additional uncertainty over the debt ceiling now because it coincides with a funding package Congress needs to pass. What's more, changes brought by the pandemic have made it far more difficult to assess the state of the Treasury Department's expected payouts and inflows. While most analysts expected a mid-October X-date, when Treasury will run out of money to pay bills, Yellen on Tuesday told congressional leaders that it would be October 18th. At that point, we expect Treasury would be left with very limited resources that would be depleted quickly, she wrote in an update. Beacon's Colton, among others, thinks markets will start to get antsy even earlier than that. The very idea of a U.S. default remains so incongruous that the reaction in financial markets isn't the only unknown. The current showdown in Washington also has raised big questions about the financial system's infrastructure. It's a bit like Y2K. No one knows how the computers will respond. "We do not believe, and the market does not believe, it's a likely scenario," said Rob Toomey, SIFMA Managing Director, Capital Markets and Associate General Counsel. "But it would be a real problem scenario for the system generally, and operations and settlements specifically." Michael Burry, whose huge, wildly profitable bets against the housing bubble were made famous in The Big Short, is wagering that long-term U.S. Treasuries will fail. His Scion Asset Management held $280 million of puts on the iShares 20-plus year Treasury bond ETF at the end of June, according to a regulatory filing released this week, an increase from $172 million 3 months earlier. The options contracts would make money if TLT, as the exchange-traded fund is known, falls as Treasury yields go up, something that hasn't happened lately as fear of the Delta variant drives investors into Treasuries. But ahead of the Federal Reserve's annual Jackson Hole Symposium, many still suspect the central bank will be able to start tapering bond purchases later this year, which could prove the bears right. Traders will be listening for hints from Chairman Jerome Powell on how much COVID's resurgence is weighing on economic growth, and whether that sways when the Fed changes course. Every aspect of the economic data we look at, from the labor markets to inflation, are all tending to look pretty healthy, which should cause yields to rise over the coming months, said Guneet Dhingra, head of U.S. interest rate strategy at Morgan Stanley. And the Delta variant fears have been priced into the market and may have already peaked. We're watching as a potential market mover off Jackson Hole whether Fed Chair Powell has updated his view on Delta, after so far seeming not particularly worried about it. Minutes from the Fed's last meeting showed most officials saw reducing monthly debt purchases starting later this year. Markets see Fed rate increases beginning in the first quarter of 2023. The iShares ETF, which tracks treasuries maturing in more than 20 years, has gained 12% since bottoming in March, while 30-year yields have fallen to 1.8% from 2.51%. In a flurry of tweets in February, Burry warned that the economic reopening and economic stimulus would fan inflation, drawing a parallel between U.S. policies today and Germany's during hyperinflation in the 1920s, the sort of situation that could prompt the Fed to jack up rates. Burry's bearish bond bet is largely in line with the calls of most Wall Street strategists. The median forecast in a Bloomberg survey is for the 10-year yield to end the year at 1.6%, with the most bullish and bearish estimates at 1% and 2% respectively. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!